This is a question that I got a lot of my recent posts. I made a post talking about how much money you need to invest every single month in order to retire with $1 million. And almost every other comment was asking me where I invest or what stocks I'm actually purchasing. And the answer to this question is actually very simple, although a little bit broad. The answer is that I buy, and a lot of people buy, ETFs. And if you don't know what an ETF is, I will break it down very simply. You can buy individual stocks on the stock market. I think everybody knows this. You can download Robinhood or SoFi or any of the apps that you normally use, and you can look up Meta and you can buy a share of Meta or Apple or Google, etc. I think a lot of people have dabbled in this when they're first learning to invest. The risk in that is that all of your eggs are essentially in one basket, or if you're trying to diversify on your own and invest in a bunch of different companies, you're having to look up those individual companies and see which ones you feel comfortable investing in. And it's a lot of time and pressure kind of on yourself. So instead of that, what I do and what a lot of people do is they buy ETFs. And these are stocks you can purchase that track an entire index of companies. So for example, a stock that is very popular right now is VOO. And this is Vanguard's ETF that tracks the S&P 500. If you don't know what the S&P 500 is, it is 500 of the largest companies traded on the US stock market. So for example, if I go and buy a share of VOO, instead of me buying a share of Meta or Facebook or Apple, Meta and Facebook are the same thing. Anyways, I am buying a share of VOO, which is a tiny sliver of those 500 companies together. And the reason that a lot of people do that, and the reason why I personally do that, is because it's a way to diversify your investments without doing all of this like intense research, staying up till 2 a.m., trying to be some financial expert. You don't have to do that. You can just diversify by buying an ETF that tracks the broad index of what you're comfortable with. And what I mean by that is there's another ETF that's popular called VTI, and this tracks the total stock market. So you can do S&P 500, you can do the total stock market. There's a ETF called QQQ that tracks like more of the tech sector. There are multiple ETFs that you can look up very easily. Just Google low cost ETFs and there'll be a whole list of them and what they're mainly tracking. I personally just like this way of investing better. It doesn't take a lot of time at all. I don't have to put in a ton of effort researching all these different companies. I just invest in these low cost ETFs. I feel pretty comfortable that whatever the market is doing, my stocks are also doing. Yes, there's still going to be down years. There's going to be up years as well. Historically, it returns on average, numbers vary, about 10% every single year. I feel good about that. And I would rather just put my money into there and have it diversify itself rather than trying to stay up all night looking up all these individual companies and seeing which ones I feel most comfortable with. If you want to see the exact investments that I'm personally investing in, there is a link in my bio. There's an app that almost every finance creator uses where you publish your stock portfolio. So you can look up like literally anybody on there and see what they're currently invested in. This is not a sponsored post. It's just an affiliate link in my bio. It's a free app. It's pretty cool. So go ahead and check that out if you want to.